Morning, afternoon, whenever you're watching this from. This was kind of an interesting week. We had one big overlying theme, flight to quality. We've got all this, everything wrapping up with the cryptocurrencies, everything, like the whole cryptocurrency market crashed, which was beautiful to watch because not that I would ever call someone out for doing this, but I'm looking at a lot of my friends losing thousands of dollars, people who are putting their rent money on this. I'm saying, diversify. This is going to be a great lesson that I think a lot of people are going to learn very quickly in these next coming weeks. They're going to say, all right, well, that didn't work. It was really cute and fun. Now let's use it for what it was meant to be. It's good for speculating. It's a lot of fun. You should enjoy it. You shouldn't put more than 10% of your portfolio, I believe, on an alternate asset like that. But that's just me. So either way, the flight to quality came in two really big different ways from what I've seen. And the first one is the downfall of the SPACs. SPAC, if you don't know, it's SPAC, stands for Special Purpose Acquisition Company, I believe, pretty sure. Correct me if I'm wrong. But either way, the whole point of this is to act as like an umbrella in which it's a blank check, just funnel as much money from investors into that as possible, and use that to merge with a private company. So what you're doing essentially is you're taking a private company public without all the horrible regulations that you'd normally have to fight through to get there. But those regulations do save you a lot of stress and time. So what has essentially happened is the startups that have been, in the past year, there's been a lot of funding from SPACs into startups that have taken a lot of big companies that you've seen public. And pay attention, you'll start to see a few of them, big names, that'll say, oh, that product that I use came here from a SPAC. But what's happened now is that we have way more SPACs than there are quality startups. And the startups that are in existence are like, look, we don't want to deal with this. It's a pain for us to deal with you doing this when we're not going to be ready for 3 to 5 years to go public. We're not ready to be fully exposed to the problems and the risks that come with having anyone able to trade and buy or sell your stock. So the numbers came out. As the Wall Street Journal reported, there's over 400 different SPACs that are just like shark hunting for deals constantly, and they're not even really caring about what the company is. They're like, hey, look, new startup, let's put money into you and just go for it. That's dangerous, and it's kind of taken the allure out of it. I know the joke last year was you're not a rich and famous person if you don't have your own SPAC, which I thought was really funny. But either way, I'm glad that that's kind of wrapped up, because that was another really fun trend that took some really nice products forward. But what it's done for us, like the real benefit of this whole movement, is that we've seen different ways to take companies public and to get them onto the equity markets. There's no perfectly right, no perfectly wrong way, but there's multiple ways. It's just an innovation. It's creativity, really, and I think it's going to push us forward in a lot of good ways. Now that we've kind of gotten like the hype juice out of it, and we can get back to reality, and I think that's a really good thing. So the other thing that happened is all the inflation numbers came out, and pretty much everything is pointing to like crazy inflation. And I'm not an economist. I'm not going to sit here and make a prediction and tell you which way it is, but the reason I'm going to say that I'm not going to bet against it is because normal people who have lives, who don't pay attention to the markets, not me, and do their own thing, they've noticed increases in prices of things that they normally buy, gas, groceries, pretty much anything. I mean, we got like an old broken hand-me-down table, and one of my buddies was like, hey, yeah, we'll just fix this real quick. I'll just run over and get a 2x4 of wood. It's $12 to buy a 2x4 right now. Like, you can't. And of course that's because the wood and timber shortage and all the commodity shortages that are happening. But commodity shortages have driven those prices up. And if the prices are going up, who cares why they're going up? If the price of everything increases, that's the definition of inflation. Your dollar's literally worth less. So all I'm saying is those fears were not a problem until normal people who do not care about this stuff started to realize it. And there was a really interesting quote. There's a couple interesting quotes. I wrote this one down. So this was from a Barron's advertisement, which is interesting. So I'm going to put them on the line because it's a public advertisement. So look out, Barron's. You guys said the dotcom bubble didn't burst until we called it a bubble. That's absolutely true, but things were a lot different 20 years ago. It is a bold statement to put that out there, because what I think what they were doing is they were basically saying, we know more than you. Like we're well informed and we're going to predict all this the right way. And you know what? They're a news company. I get it. If you want to advertise yourself, go for it. That's totally fine. But they have a point, and the point is that it's true. The dot-com bubble didn't explode in everyone's faces until all of a sudden everyone was like, uh-oh, we have a problem. We just realized that everything we've been buying isn't actually worth anything. Think about what's happening right now for a second. You could pretty much throw any of 4 big buzzwords into a company and people will buy it. The whole NFT thing, cryptocurrency, gosh, there's like 3 of them that just exploded recently. And the developer team put out a thing that said, like a press release that said, haha, we scammed you. This was all a joke. There's nothing you can do about it. And people were just so willing to throw their money into it with the promise of riches. Which brings me to the second interesting quote. It was from an old CEO of PepsiCo, and he said, "The blind pursuit of profits is untenable. It is essential we make money the right way." That is so relevant in today's environment because we have an entirely new class of retail traders who've just come in. I don't even want to say traders, investors. I'll call them traders because they're not truly investing. They're just trading for the short-term profit. So this quote is really important because we have this massive class of people that have come in. We have all of their capital. They're taking out second mortgages in some cases to be able to invest in these things because they think it'll make them rich. That's scary. We need to refocus in and say, all right, the whole point of investment is you're basically funding ideas you think are going to improve the lives of others in the future. So that's the reason that if you're investing in, like, I'll use my example, like real estate. When you buy real estate, everyone's like, oh, it's a pretty safe, stable asset in most cases. Well, yes, that's because people like buildings. Like it's a physical thing. You can touch and feel it. You can walk around it, and you can say, all right, well, we can improve this, and we can do things in this building, right? The problem with things that don't exist is that, wow, yeah, short-term gains are really fun, and you can have some really good times with them. They're not always value creating. But then on the other side of that argument, the web is building right now. It's the conspiracy web. I'll get my tinfoil hat on. But on the other side of that argument, the asset that doesn't exist, think about pretty much everything having to do with the internet that speeds our life up, makes things easier. Like when you go to a restaurant, now you can literally check out on your phone. Like you don't have to waste anyone's time. You've saved everyone 3 minutes maybe, but that 3 minutes adds up. How many times do you go to a restaurant a week? How many weeks in a year? 52. Great. You saved yourself 2 hours in a year, 3 hours. That's great. What can you do with 3 hours? Go sit on the beach. That's what I would do. Either way, so value add doesn't necessarily mean tangible, and I will die on that hill. There are plenty of intangible things that add value, but we really need to identify the difference, I think, personally. But either way, that's what I got for you. I'm excited for this week because now that everything's calming down, what I think we're going to see is I've been wanting to take bets on this. Every time I talk about this with anyone else, they're like, all right, so it's wild what just happened in the past 3 months. When's it going to happen again? And I said, I'm willing to bet under a month. I'll bet the cycle is so fast that all things held constant, unless there's something crazy happens, which, it's life, something always will. But everything else held certain. If we somehow have a really calm next month, I'll bet we have another one of these insane run-ups of the crazy markets that don't make any sense. People are going to forget all their losses. Our memories are so short. They're going to forget their losses, come right back in. So if you're bullish on that, try and time it and see what happens. But don't put more than 5-10% of your portfolio on this, please. You'll hurt my feelings if you do. Either way, have yourself a great week, and I'll see you soon.